Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. Markets in Nigeria brace for inflation numbers from December. NBS is waiting to let that out. The United Arab Emirates and Kenya enter significant trade agreements aimed at enhancing economic cooperation between the two nations. And MTN Ghana has achieved a groundbreaking milestone, reaching an all-time high on the Ghana Stock Exchange. And it's great to have you join us on the show. I'm Ladi Williams. Let's get a check on what's playing out with most of the markets that we track here. We see oil prices with little change today after falling in the previous, that's the previous day, as a dip in U.S. crude stockpiles. Expectations of supply disruptions from sanctions on Russian tankers that lent support amid forecasts for lower global fuel demand. We see Brent crude futures, that was up about 2 cents to $79.94 a barrel. After dropping about 1.4% in the previous session, U.S. WTI crude, that rose about 12 cents there to 0.15%, $77.62 a barrel. That's for early trade, but currently trading at $78.82 a barrel. That's what we have for WTI. To the metals market now, we see gold prices edge lower today as cautious sentiment that took hold ahead of the U.S. Consumer Price Index report, which could offer vital insights into the Federal Reserve's interest rate outlook. Spot gold slipped about 0.1% to $2,672 per ounce. While U.S. gold futures, that rose about 0.3% to $2,689. Other metals we tracked there for silver, $29.81, down 0.3%. Platinum, that's unchanged. Palladium down 0.3% at $935.89 per ounce. And there you have it, all eyes on that U.S. CPI data coming out. So all the stories now, the federal government says recapitalization of the Bank of Agriculture will be finalized by the end of the first quarter of this year. Minister of Agriculture and Food Security, Abubakar Kyari, made this known while briefing State House correspondents in Abuja. It says the move, which is part of the government's response to escalating food insecurity. As I also mentioned, the initiative would enhance funding for smallholder farmers, addressing long-standing challenges in accessing financial support for commercial agriculture. The minister says the recapitalization, which is part of strategic interventions aimed at mitigating the crisis, is crucial for combating food inflation, which currently stands at about 34%. The National Council of Privatization, NCP, which is chaired by Vice President Kashim Shettima, had in 2024 inaugurated a committee headed by Wale Edu, Minister of Finance and Coordinating Minister of the Economy, to work out modalities for the resuscitation of the bank. And the President of the African Development Bank, Dr. Akinwumi Adesina, and the Vice President for Finance at the AFDB, Hassatu Diop Nsele, been named among the 100 most influential Africans of 2024 by New African magazine. Dr. Adesina, whose tenure at the Multilateral Finance ends in August this year, has led the multilateral financial institution for a second term since 2015 and transformed the institution's capital base from $93 billion to $318 billion. Recognized as a visionary leader, Dr. Adesina was recently named African of the Decade by the end of last year for his profound impact on Africa's development. Under his leadership, the bank has made strides in agriculture, infrastructure, and economic growth, with Dr. Adesina affirming his commitment to serving Africa until the end of his tenure. On her part, Nsele was celebrated for her innovation in climate finance, as steered the AFDB's pioneering efforts in introducing a $750 million hybrid bond, which was oversubscribed by $6 billion, marking a significant milestone in climate finance and enabling multilateral banks to access private capital for large-scale development projects. Well, let's head to our first conversation now. In a recent move to ensure better service delivery and compliance with banking regulations, the Central Bank of Nigeria has imposed a hefty fine of about 1.35 billion naira on 9 commercial banks for failing to dispense cash through their ATMs. On the other hand, we have the Nigerian Communications Commission threatening to name and shame banks owing telecom operators over 200 billion naira for the USSD service. Let's talk more now to Mr. Ogbonna Okuku, who is an economic development expert, joining me from our Abuja studio. Great to have you, and Happy New Year.
Yeah, Happy New Year, laddie. It's good to have you. It's nice, being on the show.
Fantastic. So, from this fine, on the banks by the regulator, does it mean that the banks are the main division, between customers and cash? Or could it be the banks just don't have cash?
Now, for the central bank to want to monitor, that means the banks are not with the central bank. That means the banks are with the, with the commercial banks. So how they structure, how they dispense, how they, make their customers comfortable with those resources is the onus is on them. So the reality is, whatever reason, whatever they do with these funds that they don't want to make those funds available, maybe, is actually very is disheartening because Nigerians suffer. People, go as much as, it's only in Nigeria you hear people buying money, because, it comes to that point where people now begin to buy funds. Because if you go to the banks, you are not able to get funds from the ATM machine. So you are now left with no option but to, go to the ATM, the POS points where you are asked to pay any amount of money to get those funds. But this is very key. This is what I say all the time. See, in my study of nations, looking at developed nations, and underdeveloped nations, one thing came out very strong that we are not doing well. The developed nations, what they do is they don't expect people to do the right thing. They make people do the right thing. They are two different things. So what I like that the central bank is doing now is because the government of central bank now knows that they have to make these banks do the right thing. Because if I'm a regulator, if all I do is just speak and I don't do anything, you see, when people do wrong things over a period of time, it becomes like a culture. So I like the fact that the central bank is hitting hard on the banks because they didn't have to be made to do the right thing. Because they have to defend Nigerians, because who are the stakeholders? Because the commercial banks, all they're interested in is their shareholders, and shareholders are interested in profit. So if you must give the stakeholders what they require, Nigerians what they require, so somebody has to speak for Nigerians, and which is exactly what the central bank is doing, which I really appreciate them for that.
Right, and this is for not dispensing cash, on the ATMs during the Yuletide season. So I'm wondering, after the fine, what next? One would expect the banks to be scampering to load the ATM machines now, but it seems that's not the case.
Now, for those banks who are culpable, by the time they lose those funds, so what happens is, let's say is an internal issue. So those given saddled with the responsibility to, make sure that the operations managers who are supposed to feed those ATM machines, and they didn't do it. So if the bank loses money, so the bank obviously the pressure will be on them to hit those who are saddled with the responsibilities directly. So when they start to lose money, everybody now begins to sit up, because the reality is, until you, like I said earlier, you must make people do the right thing. Don't expect people to do the right thing. As soon as they begin to, everybody gets a bite of it. So people will just sit up, naturally. So those banks, as soon as they begin to lose money, of course, they will begin to make sure, line manage properly, micromanage people, make people, just get people to sit up to do their work, because every single decision we take at every point in time affects the next person, which is that man nature. You need to know that anytime you take a decision, you need to consider the next person, because whatever you do affects the next person.
And I'm trying to imagine, after the fines and, the ATMs still stay empty, you still can't get cash, for the ATMs. What do you think should be the next step, at this point? Because you don't want the regulator to, look like they don't have power, over regulation.
I think the central bank should be harder. I think they should, the supervision that they're supposed to be doing to banks. I mean, the banking supervision department of the central bank should, set up a monitoring team that will be going around from bank to bank, from state to state, to make sure that these ATMs are loaded. And then, like I said, you will definitely find somebody who's not doing the right thing. And then, but from the fines they pay, you use it to make sure that that team or the units, they are well funded to make sure that they go around to monitor. So I think that's the next step. See, like I said, I keep saying we need to make people do the right thing.
Because I'm wondering, how else can the central bank, get cash to the people, if the banks are not doing it? Because we did hear about the e-naira, at some point. That somehow was a direct contact between the central bank and, that's the banks. So that would leave, the commercial banks somewhat out of the loop, if it was the e-naira. But this is a different ball game. This is cash, we're talking about at this time. Is there really going to be a change in 2025? Do you think Nigerians will really have access to cash like the good old days?
Yeah, so I mean, trying to get the central bank to do beyond what they are supposed to do. I mean, it's their mandate is very clear. There are a few things that they can't do. Yes, introducing the e-naira was not for them to compete with the commercial banks. The commercial banks have to do their job. So what I think is more licenses to. I mean, they should create competition among the banks. More people should come into the playing field. So when that competition is created, it gives room for those who feel that we are all and all. They begin to sit up, and then they begin to knowing that there's competition, you definitely have to sit up. So I think even the microfinance banks should be supported to make funds available, especially to those who are not able to bank with the commercial bank. So they provide those support, and then again, like I said, the ATM points, the POS points. I mean, there has to be a stronger regulation to see, to regulate how much they charge, how much, for them to dispense those funds or give out funds to people. So those charges have to be properly regulated. So we must put eyes on whatever everyone is doing, because I mean the stability we need when it comes to our financial ecosystem has to be well structured and robust.
And talking about the banks, getting all the attention at this time, that's Nigerian banks. You see, the Nigerian Communications Commission, they're planning to take drastic measures to end the lingering disputes that's between the telcos and the banks over the unstructured supplementary service data, USSD debt. Is it that the banks don't get value from this USSD service? That's why they're not really, keen on paying back that debt?
So it's an ongoing conversation. This whole conversation started from the Department of Banking and Payment Systems in the Central Bank 2017. So this conversation, I think it was actually something that wasn't properly managed from day one. So from 2017, when this whole, the framework was put in place, yes, even the Central Bank within the framework, have the powers to actually penalize or to sanction any financial institution that is not playing by the rules. So, I mean, the conversation, even I think it was in 2021, again, there was a round table, NCC, the central bank sat down, and then to look at how to get this things to work. So, I mean, what should be charged, how this money should be domiciled within the banks. Even at the point, the bank said, okay, telcos, charge your funds directly from Nigerians, and then so. It's a bit tricky, but I think it's something that the central bank should come in at this point in time, because the NCC taking that drastic decision, that means they're going to be getting a lot of people out of the banking system, because there are people who don't have smartphones, who depend on those USSD to get transactions to happen in the local areas. These are people who the financial system that have to be carried along in the financial system. So I think the central bank should come in now, because the NCC's decision might, affect a whole lot of people. And like I said earlier, we need to take decisions knowing that people will be affected, because if we are talking about supporting those who are, I mean, like the slogan, allow the poor to breathe, they are already suffering with high inflation. Now you want to get people to suffer. So I think there has to be a way that the central bank needs to, let's look at the books. How much did you receive, because those monies are domiciled in these commercial banks? These things are not hidden. So let's see how much. Okay, are you trying to say that this money, is it like a protest that these monies that are being received by telcos, you don't get enough out of it? So let's work around it. These are things that can be solved. But I think at this point in time, central bank needs to come in so that NCC does not do what they want to do. I understand why they want to do what they want to do, but the truth still remains that a lot of people, just like two elephants fighting, then the grass will suffer, like they always say.
Right. At some point, we're hoping the grass doesn't have to suffer, right now. But yes, as I said earlier, we've been expecting inflation data. That's for December 2024. That's out now, released by the National Bureau of Statistics. And the numbers are out, 34.80%. That's what we have for December inflation, from 34.60% in November 2024. The rate of rise there, that's about 2.44%. That's the rate of rise from the previous month. Food inflation rate, that's 39.84%. So we finally have that data. And yes, definitely that's going to tell us, so give us an indication of what to expect when it comes to monetary policy rate decisions. So, Mr. Akuku, the numbers are out for December. After all of the partying and the dirty December, we saw all of that data showing how Nigerians, home and abroad, spent money. So what do you make of this data, 34.80%? Is it in line with your expectation? That's for December.
No, it was expected, because I mean, like you said, a lot of people spend. There's always a lot of spending. So the issue of inflation, hitting hard, was expected. So that said, I think it is central bank on their own, knowing that this will happen. So the next MPC, so you expect a tightening, further tightening, because I mean, whether you like it or not, so we need to, we need to curb, find a way to curb the inflation. The inflationary pressure on goods and services is something that they have been working on, and then we've been achieving results, though gradual, but I mean, it's something that we need to continue on. So I mean, it was expected that a lot of a disposable income would be used to celebrate and all. It was so much. I mean, it was expected, really.
Right, and talking about the rebasing, that will be for January. Some say that might take inflation number maybe higher or lower, depending, on how much change, comes to that methodology and the inflation basket. But I guess a lot to look out for investors and all those people there that help us track most of this data, to help us give a forecast on what's going to play out, with the Nigerian economy. But it was great having you for the show today. Thank you so much. That was Mr. Ogbonna Akuku, economic development expert, who was joining me from the Abuja studio. Thank you so much for coming on today.
All right, thanks for having me.
All righty there. We'll take a break now. When we come back, we'll head straight to the market to see if investors might be reacting, to that inflation number for December. That's in a moment. Just stay with us. All right, let's head straight to the markets now. We have Anete Ede to give us the details of what's playing out with the local bourse and most of the global markets that we track. Anete, yep, it's out now. The cat's out of the bag.
Yes, Martin. Yeah.
It's still not far off, from 34.6%, about 34.8%. And, some would say with all of that dirty December spending, you're expecting maybe about 35%. So I guess it outperformed.
Yeah, well, Ladi, I would say that I wasn't really surprised to see that number, because at some point, when you take a look at that inflation number, you'd also need to go down to what were the major drivers. 34.80% is not too, month on month is not too high when you compare it with 34.6%. But at the same time, you also take a look at the urban inflation and the rural inflation, as well as the core inflation, other key drivers of the inflation metrics. Also, when you also take into consideration the major reason why inflation rises, which is food. Dirty December. December is a month of festivities, and it's also a month in which you always expect that inflation would go on the higher side. But let's not forget that the UK's inflation also came down in the month of festivities. UK's inflation was about 2.7%. It was expected to have gone maybe to about 2. It came in at 2.5%. Was expected to
So I
come
guess,
at about
you know, festivity spending, I guess inflation is outperforming expectations because you expect inflation will be much higher, you know, when people are spending and having all that fun. But I guess it's a different case here. But I'm wondering how the markets are looking. I don't think the NGX will be reacting yet to this, or maybe it's priced in.
Well, Larry, at some point, some people will tell you that, yeah, they're already priced in the possibility of a higher inflation rate. And of course, they'll take position, you know, in order to hedge against inflation. But it's a different ball game, especially when you look at on the fixed income environment, which we'll be focusing on, and the equities market side of things. But nonetheless, you still expect that when the MPC will be meeting, they was initially supposed to meet in January, that's this month, but that has been shifted to next month. We'll get across to our fixed income analyst to tell us more about that. And then tomorrow we'll see the day after the inflation numbers was released, you know, how that will impact on the market performance for Thursday. Okay, so now let's take a look at the market's intraday numbers. We saw the market falling all the way from 105,000 points, which was down by a very massive amount when you compare it to the previous level yesterday on Monday. 103,746.15 is what the market came in finally. After yesterday, we saw the market dropping and the year to date all the way from 2.37% down to about 0.68%. So that's a massive wipe off of more than 1% or almost 1.5% knocked off from the market's previous level. 0.13% is what the market has been able to pick some of the bones of the carnage that happened on the market. No thanks to losses from the likes of Dangote Cement, which is one of the major, most capitalized equity on the Nigerian Stock Exchange, as well as Vitafoam. MTN Nigeria was not also left out of that profit taking, which also dented the market's performance. So the major behemoth of the market really made a negative impact. But of course, let's not talk about the market in a very bad way like that. It's all about profit taking. People are taking money from where they put their investments. And when you start the year at 2.37% week to date, it's just about some 15 days into the year, you just got to make some money. So that's what happened, why the market pulled back all the way from the 105,000 points to just about 103,746. Let's hope that this number, which we tracked the last 1 hour, would still be in the positive side of the market. For the Johannesburg Stock Exchange, which is another market that has come all the way from some highs, I mentioned yesterday, all the way from 86,000 to about 82,633.69 index points. But for intraday, it was up by 0.62%. So this market number is still moving as we speak. And for the other two markets for the African region, EGX 30 up 0.32%, and still trying to make its way back into the 30,000 level, 29,058.65 for the Egyptian Stock Exchange index. And for the Nairobi Stock Exchange, for the close-up Tuesday's trading session, it was up by a tad, 0.05%. And also, this is also trying to come all the way from 120, 130 to about 129, almost at 130 index point, 129.73 for the Nairobi Stock Exchange All-Share Index. So that's the snapshot for the major markets across the African region. And so let's take a side switch into the fixed income market side. Well, we just saw the inflation numbers being released just a couple of minutes ago by the National Bureau of Statistics. Let's not forget that the National Bureau of Statistics, the website is still down, no thanks to that cyber attack that happened on December the 18th. But we still have the inflation number for December still coming up, because that is a major gauge for what the next action of the Central Bank's Monetary Policy Committee will be when they meet sometime in towards the middle of February. But of course, before we get to that point, let's talk about the reaction to the market. And we have with us here Raymond Okpara, who is a senior fund analyst with AfriInvest West Africa Limited, to give us details about this. Thank you for joining us, Raymond Okpara.
Thank you so much, Anita, and thank you for having me, channels.
Okay.
So starting from inflation, just like you said, we just received numbers for December 2024 that showed an increase from 34.6% in November to 34.8% in December. And to be honest, this was in line, with analyst strategies. And, for that period, while we saw that there was a reduction in fuel prices, by NMPC, and we saw some stability and appreciation with the Naira, which we say was all thanks to CBN's new electronic FMs platform. This helped to alleviate some inflation pressures, but these measures were not sufficient enough to counter, like the earlier presenter talked about, typical spending increase in demand for December. The festive seasons generally are, in line with the Detty December rave, are marked with higher spending on items like celebrations, travels, and gifts. And these were major factors for analysts that were expecting this upward pressure on prices. And, I can say that contributed largely to the slight increase in inflation.
Okay. So, Raymond, I'm very curious. The bonds market, yesterday we saw, although that came out on Monday, the FGN savings bond, the very first for the month of January, the very first for 2025, the two instruments. Now, so tell us, how are investors reacting to this latest FGN bond auction, which will be ending in about 2 days from now? That's on Friday.
Yes, very correct. The January FGN savings bond offer is now open. And like you mentioned, it's featuring 2-year and 3-year bonds at attractive rates, 17.25% and 18.235, percent on the 3-year maturity. For investors are reacting very positively to this. Firstly, investors are always, are good with the rates. And what you understand is that with a minimum of at least 5,000, investors can earn regular investments, on these secure instruments. So for investors, I think the major concern has just always been how to access these investments. And, through reputable investment firms, investors are able to grow their income and maintain the savings culture. But like you said, the offer ends in 2 days. So as we've seen that activity, the investors will continue to take part in this FGN saving bond offers in line with the savings idea of the savings bond.
Okay, so Raymond, finally, we talked about the FGN savings bond, but then there's also supposed to be the FGN bond proper for the month of January, and we're yet to see the first quarter bond issuance calendar. So now, what are we to expect besides this, the bonds calendar, the FGN bonds which should be released, and then what are we to expect in the coming days?
Yes, so I mean that has been on market tongues for a long time, and because we understand that auctions have typically shaped yield movements across markets. So just to go back to what you said, in the first week, you see the investor sentiment has been neither here nor there. The first week started on a very bearish tone. Markets were looking forward to what inflation numbers would be, typically in report of the rebasing exercise from the CBN. So we suspect that the auction calendar is the major focus to know, how the fiscal conditions will be managed. How much more are we looking to raise? What tenors will they be focusing on? The mid-tenor bonds like the 29s and 2031s that have been the mainstay to manage inflation, and typically to give guidance on where rates will be long term. So in terms of size, similar size actions from previous maturities, and also the size will also give us sense, to how much more we are able to work with for the year in terms of the fiscal actions and also budget planning. So I think it's the same activity. For the bonds, we expect that auction calendar to give market a lot of direction. So this uncertainty we've been seeing through the 2 weeks would then have a clearer direction.
Okay, so we just hope that bond calendar would come in time for investors to make their investment decision, because 2025 has just started, but it's not too late to start the investment. So thank you so much for your time, Raymond Okpara, Senior Fund Analyst with AfriInvest West Africa, for that information on the fixed income market and its expectations for the month of January. Okay, let's make another switch back to the markets, and this time is the Middle East as usual, which is always our next stopover. Dubai, where our president currently is, President Bola Ahmed Tinubu, is in United Arab Emirates, still making so many other movements within that Middle Eastern region. But as far as the markets are concerned, the markets are moving in positive territory. The greens have it, sustaining that rally that we saw yesterday. 0.11% for the Dubai index, 5,251.53, while the Abu Dhabi index up by 0.09%, 9,505.7 for the index points on the two United Arab Emirates indexes. And for the other, their counterparts there, still within the Middle Eastern region, Saudi Arabia's Tadawul, 12,208.69, up by more than a quarter of a percent. Qatari Stock Exchange, that's for that market there, 0.42% at intraday, 10,428.81. So it's a very squarely positive movement for major markets within the GCC indexes there. That's for the Gulf stock indexes that we see for the for intraday market numbers. Okay, so let's talk about the U.S. stock market. The stock futures are rising slightly, and this is because yesterday we saw the producer price index, which is one of the primary inflation gauges that the U.S. Fed, which is expected to meet on the 17th and 18th of this month, talking about the Monetary Policy Committee, that's the FOMC there. But today, the market is expecting the release of the Consumer Price Index, which is set to be released anytime from now, 8:30 a.m. Eastern Time. And economists are already polling that this CPI is seen rising by 0.3% on a monthly basis and gaining about 2.9% over the 12 months. But so far, the Dow Jones Industrial Average, the S&P 500, and the NASDAQ, all in the greens, as you can see on your board there. So that's as far as the market is concerned. But on the earnings side, we just have it here that JP Morgan Chase, which is one of the biggest banks around the world and in the United States in particular, has reported its fourth quarter earnings, which came in what kind of what the economists weren't really expecting. Earnings per share came in at about $4.81 per share against $4.11 per share. Revenue at 43.74, and that's it for. Well, the market will be expecting some other earnings results to be released. But as far as Tuesday's trading session is concerned, let's bring in Maria Bird, our Washington correspondent, for details of the activities for the close of that session.
The U.S. stock market had a mixed day on Tuesday, as the Dow Jones had a bit of a challenge to start off the day, but closed in the positive at 0.5% up. This was the second day for the blue chip to be up for the closing. And the S&P 500 also closed slightly up at 0.1% up, while the heavy tech NASDAQ had a downward slope on Tuesday, closing at 0.2% down. Many investors are watching to see how the Federal Reserve will respond to try to stabilize inflation as they continue the fight to this challenging inflation struggle. But December was a little less than what was expected for inflation. Seems that there could be some stabilization. The new presidential administration appears to be potentially having a gradual approach to tariffs, rather than what was once believed to be more of an aggressive approach. This could also be a positive impact for stabilizing inflation.
Our Washington correspondent, Maria Bird, giving us details of the close of Tuesday's trading session on Wall Street, that's the United States financial capital. So finally, for Asia markets, well, Ladi, I won't be able to give you details about that, but in a snapshot, we had the Reds have it there.
Right.
No thanks to some
All right,
the inflation
so
data.
One down and more to go. We have inflation for Nigeria. Looking out for what comes out from the U.S., that's the U.S. CPI. For December. Thank you so much.
We'll break that in a couple of minutes from now.
All right, looking forward to it. All right, let's get a check of what's playing out in Europe now. Who doesn't like a bit of chocolate every once in a while? Well, the Swiss actually like it a lot, and the country consumes more chocolate per capita than any other. But Germany and Austria are close, as are some other European companies, including Belgium, where some top brands are located. For Germans especially, there has been a new trend in chocolate as of late, and it's hit a bit of a snag. Lars Holter is with DW and has the details now. Great to have you, Lars. So, what's the latest chocolate craze in Germany?
Yeah, thanks for having me, Ladi. Well, it's called Dubai chocolate. It's funny, we just heard about Dubai markets being up by 0.1% here, which our colleague just reported. But we want to not talk about Dubai markets, but Dubai chocolate. It's a really delicious kind of chocolate filled with pistachio cream and angel hair. And as the name suggests, well, it stems from Dubai. And it has just recently entered the German chocolate market just a couple of months ago. It was an immediate success, fired up by social media influencers who shared their obsession with this treat. The Dubai chocolate craze went so far, we had literally people lining up for city street blocks whenever a new batch was delivered. Case in point, the Swiss brand Linz, a store here in Berlin a couple of weeks before Christmas, they offered just a couple of bars of that chocolate. They sold it at ridiculous prices, but still it sold out within half an hour. Now, the regular grocery stores, they didn't want to miss out on that trend and offered whatever they could get their hands on, and that led to some funny escapades, including regular chocolate bars selling for 99 cents a bar, right next to that Dubai chocolate selling for up to 30 euros.
All right, I guess we can say it's a chocolate rally there. But looking at that Dubai chocolate, is the brand filled with the pistachio cream and crispy pastry in there. But why is there suddenly an end in sight?
Well, there's a problem. Funny thing, it turns out, of course, that Dubai chocolate has to come from Dubai. But that country doesn't produce enough, apparently, for export and to fill this rising demand that consumers have. So many chocolate makers here have resorted to other options. They simply made their own versions, or they imported Dubai-style chocolate from other countries, which means Turkish-made bars, for example, have sold under the Dubai moniker in grocery stores. And of course, it didn't take long for the original Dubai importer to sue. He claimed that chocolate not coming in from Dubai is not actually Dubai chocolate, and that these retailers are abusing a trademark. Interesting note here, the EU has very strict laws indeed on regional branding. They were originally meant to protect European brands from a foreign counterfeiting. They were meant to ensure, for example, that nothing sold as champagne that didn't hail from the Champagne region in France, or that nothing sold as Nuremberg sausages if they didn't come from Nuremberg, or Bavarian beer if it didn't come from Bavaria, and so on. Now, it turns out, Ladi, these laws have to be applied, of course, both ways. And now German importers are learning that there is no quick workaround such regional themed branding. And a court just yesterday banned Germany's biggest retailers, Aldi and Lidl, from selling Dubai chocolate, as their particular bars, well, did not come from that country.
All right, but Lars, I don't know about you. I'm good with my, dark, chocolate. But, putting the chocolate aside now, we have data out in Germany showing that the economy contracted. How are investors seeing that?
Yes, the numbers weren't that sweet at all. It's interesting if you look at markets, just looking at the DAX, we see the German blue chip index up by almost 1%. But of course, like I said, these numbers are bad. And the positive, or let's say somewhat positive reaction on the markets is probably simply due to the fact that these numbers weren't entirely surprising. Let me run through them. Of course, we saw, like you just said, the German economy contracting for the second year in a row for now in 2024. And even worse, of course, there is not much of a sign of a recovery. Now, for the details, gross domestic product here in Germany, and I have to state this is the largest economy in the Eurozone. Our GDP has declined 0.2% last year, and that's after a 0.3% contraction in 2023. So after Germany has long been Europe's economic powerhouse, we're knee deep in a recession. Partially, it's due to still high energy prices. They have led to higher prices in general, and of course, lower consumer demand. There's little activity in construction, and even lower industrial demand for certain goods. There's also weak demand from China, so exports are down. So all this weakness has led to layoffs too, and that, of course, is again weakening households. It's pretty messy, the whole situation. And as we're heading into elections in a few weeks, it couldn't be more clear that the new government will have the work cut out for them.
All right, we'll keep tracking to see how investors and the government chew on this latest data. Thank you so much, Lars Holter, right there in Berlin. Thank you.
Yeah, thank you, Ladi.
All right, now let's look at oil. You know, today we're expecting data from OPEC, and that's the monthly oil market report. For the month of November, that increased by about 0.5%. That's about 104,000 barrels to average 26.66 million barrels. That was the average there for November. So we're still expecting the numbers. That's for December 2024. Join us now to unpack this. We have Chinan Dekwal, the Vice Chair, African Energy Council. Great to have you, Chinan. Happy New Year.
Hi, Ladi. Happy New Year. Been a while.
Yeah, it's been a while. Welcome back. Well, so we're seeing data from the Energy Information Administration that came out yesterday. They've looked at their crystal ball. They have a short-term expectation there. They expect oil production will rise, but not with a corresponding rise in demand, which is expected to keep prices pressured. How are you seeing that forecast as we expect the MOMR for December 2024?
That's a really good one, Laddie. And I think you and I have had this conversation many times last year. So if we start with the IEA, who you are quoting, they have generally had a less bullish approach, less bullish view to the oil price. A lot more realistic, actually, if you ask me, their forecast of last year. Compare that to OPEC. OPEC was initially incredibly bullish. OPEC had to revise, believe it or not, their forecast of oil price 5 times last year. So actually, the numbers ended up closing much closer to what the IEA said. But to your point here, the reality of it is for 2025, the demand growth for the globe is going to be tepid. Most analysts agree with this, OPEC agree with that, and the IEA all agree with that. The amount of growth, the global growth for oil price is assumed to be roughly 1.1 million barrels for the year, and that's very, very conservative. Now, just because of that, because it's going to be very, very, very low, if you compare that to this supply side, which is a point you were making there, Laddie, you'd see without a doubt that there are several headwinds that are coming, which potentially could sway things around. So one of those is the fact that OPEC is going to start to rewind its production cuts, the ones it made in 2022, is going to start bringing those barrels onto the market in April of this year. Once those barrels come into the market, supply increases. That's number one. But number two, Laddie, is the fact that we're having a new administration come into the US, and the policy is drill, baby, drill. What that ultimately means, we're completely unclear of, but certainly it sounds like there'll be a lot of drilling and new volumes may come onto the market, particularly for shale.
Right, and talking about drill, baby, drill, there seems to be, optimism regarding oil production in Nigeria. That's kept rising for the final quarter of 2024. But if it continues and we see other, OPEC members also producing a lot in 2025, so I guess that might not translate to more revenue, if the prices go down, but our production goes up.
Absolutely. So like, that's spot on. So I think a couple of things for us to take away as Nigerians. First thing is huge kudos for the fact that we have been able to grow the oil price in the last 18 months from about 1.1 million barrels per day. I think you can argue around sort of February of 2023, 1.1 million barrels per day, to where we sit today about 1.49 was the last number in November of last year. So it's been a massive increase, 30%, you can argue, and that's very significant. What that means ultimately is we have a lot more revenue coming into the purse, and it gives a lot of confidence to investors. How have they been able to do that with all the things you've seen, Laddie? Operation Delta Sanity, Operation, the special operations there, in the Niger Delta. But to your point, 150%. There is an opportunity for us to further increase the oil supply. But what does that mean for price? You and I have just finished talking now. If there's an oversupply in the market for this year, like we're talking, if demand is low and supply is high, price potentially will come down. So there could be a penalty there. We don't know where it would sit, but certainly I think we're looking at weaker oil prices for 2025, potentially around the $70 per barrel mark all through the year, I would say. But of course, an increase in production would be very healthy for the country.
Now, what are you expecting for the MOMR? That's the report for December. That's coming out from OPEC.
So that's a great one, Laddie. I think for Nigeria, I'd say this. We expect, so if I just go back 3-4 months ago, so you go back to the month of September, 1.33 million barrels per day. You go back to the month of October, 1.34 million barrels per day, quite flat. You go into November, 1.49, so a huge jump there, the month of November. How has that happened? Operation Desert Sanity. A lot of the crude oil theft that was happening was sort of curbed. I think around 300 vessels were impounded and arrested, in that area. So that's sort of brought some sanity. We expect for the month going forward, without a doubt, that numbers will be around, the 1.48, 1.49, probably just above that, for the month of December. But certainly is going in that direction. There's a lot of momentum in that space. We expect it to be steady like it was in November. But I'll say this without a doubt. There are lots of positive signs that we're seeing in the oil and gas industry that we haven't seen in the last 8 years, I've got to say. The last 8 years, all the deals stalled. They were just on the table. The ExxonMobil deal did not move. The Shell Renaissance deal did not move. The Owando ENI deal did not move. All of these have moved right now. And guess what? Shell has announced FID for Bonga North, $5 billion of investment coming in. We haven't seen any FIDs in the Niger Delta in the last 10 years. The first FID in the Niger Delta in the last 10 years. Outside of that, we saw ExxonMobil announcing $10 billion of investment coming in for subsea tieback OWO, the OWO subsea tieback, again in deep water. So there is a lot of movement in the area right now. I think a lot to cheer about, but hopefully the oil price can be kind to us.
Right. I hope the oil prices are kind, and maybe PMS even kinder to Nigerians. Thank you so much. It was great having you, Chidan Dickwell. He's the Vice Chair, African Energy Council. Hope to see more of you in 2025.
Absolutely. Thank you.
Let's get a check on all the stories now. We see Scancom PLC, popularly known as MTN Ghana, closed trading on the Ghana Stock Exchange at a record high for the second consecutive day, reaching about 2 Ghana cedis 60 on January 14, 2025. This follows the company's milestone on January 13, 2025, when it peaked at 2 Ghana cedis 55. Notably, MTN Ghana commenced the trading week at about 2 Ghana cedi 51 and has continued to attract strong interest from investors, gaining about 1.96% yesterday. I'm sure investors will be keeping an eye on that one. All right, to other stories. Right there, we see the United Arab Emirates, that's the UAE, and Kenya and Malaysia and New Zealand. They've signed an agreement, their trade agreement, marking a crucial step toward ratification and implementation. These agreements are part of the UAE's broader strategy to strengthen its post-oil economy and diversify its growth prospects. Since 2021, the UAE has been actively pursuing a series of comprehensive economic partnership agreements to reduce its reliance on fossil fuels and foster long-term economic resilience through enhanced trade and investment partnerships. All right, to other markets now. Let's get a check on what's playing out in the crypto market. We're seeing that mixture of green and red on the board, but it seems like the greens have it at this point compared to the red parts. Looking at Coin 360, giving us a picture of what the crypto market, how investors are feeling in the market. But we're seeing the XRP, they're having quite a run. 9.59% up, $2.81. Looking like it's heading towards $3 at this rate. And we have the likes of XLM. They've had that relationship for the longest time. XRP rises, XLM finds a way to follow. But we see Ethereum on the flip side down 0.61%. Let's look at how what the sentiment is saying. Fear Greed Index, greedy. Investors are greedy in the market again, 70 points from hitting neutral, according to CoinMarketCap a few days ago. To the top headlines now, we see Gary Gensler. He's saying that he never declared Bitcoin a security. That's in a recent interview. The chairman of the U.S. Securities and Exchange Commission is clarifying a long-standing misconception surrounding Bitcoin and Ethereum. Is it a security or is it not a security? So it's clarifying there. Then to other headlines in the market, we see MicroStrategy, their price targets. That's the share price of MicroStrategy that has been increased. And that's by Cantor Fitzgerald, the financial services company. They increased the price target for MicroStrategy from $518 to $613, citing the company's aggressive Bitcoin acquisition strategy. Let's bring in Gilbert Jokpata, our financial market analyst. Hello, Gilbert. Great to have you.
Yeah, good afternoon, Ms. Ladi. Good to be here.
Yeah, so we're seeing the market from a bloody weekend for Bitcoin and Ethereum and most of the cryptocurrencies. This week is looking quite good. A bounce there from touching about $89,000 back to 97,000. Well, it seems there's some resistance along the way. How are you seeing it?
Okay, Bitcoin is showing a couple of levels, but it had a support level, which was about that 92K to 90K. And it's actually a good support if you're looking for it for institutional re-entry. And yes, there are some sharp patterns as well playing. We had a descending wedge. And also, typically these are actually, they actually call for possibility of bullish breakout, which also align also with the triple bottom, which also suggests that buying interest and accumulation is in that zone. And this is what took us to about this $96,000 thereabout, which we are in, which is another psychological resistance. 96 to about 100K is a psychological resistance in that level. But then I think today the market is also on the sidelines awaiting today's CPI number, which is very important because I don't just think the currency market that is also watching out for today's inflation numbers, also the currency market at large. And this is because the market has pushed back expectations of a rate cut till about June. After last week's job number came out unexpectedly stronger than expected, it gave us an increase of about $256,000 job created as against $160,000. This is supposed to be good news, but then welcome to finance, since it tells us that, the market, yes, can absorb some more rate cuts, but it won't be aggressive, and then it will be little, in numbers. So right now, we'll be anticipating more of a 2.9% by analyst speak. And so I think today the market is also on the sidelines, also watching and waiting for what the CPI number will give. And then we will know what will happen between the two levels, if there are possibility of a breakout, a breakdown, or a continuation of the rate.
Okay. Well, I guess so much to look out for today. Investors bracing all over the world, looking at all their assets and wondering what's going to happen with inflation numbers coming out from the U.S. Well, thank you so much, Gilbert Jokpata, the team lead at the Smart Investor Lodge. Thank you for coming out today. All right, so there you have it. We're seeing Bitcoin facing some resistance, trying to get back maybe to the 100,000 level. We'll see if that if the bulls can actually push it, to that level. But at the end of the day, everyone's looking out for the U.S. CPI data for December for clues on what the U.S. Federal Reserve, what they're going to do with interest rates in 2025. Are they going to still keep cutting? Will the cutting be as expected, or what investors are expecting, so that they can have most of these risk assets still have fun in 2025? We're looking out for that, and we'll give you all the details for the numbers coming out for December. But thanks so much for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.